In the previous video, you learned how to find adjusted gross income, or AGI. Now we're going to talk about taxable income, which will be the AGI minus your deductions. The first type of deduction is a deduction for exemptions. First, the number of exemptions will be one for yourself plus your dependents. And then you'll take that number times $3,650 for your deduction. You can also make one more deduction, and it'll either be a standard or itemized deduction. So standard deduction, you get $5,700 if you're single, $11,400 if you're married filing jointly, $5,700 for married filing separately, and $8,350 for a head of household. Now, head of household is if you're single and have dependents, then you qualify for head of household. Itemized deductions are going to include things such as medical and dental expenses, taxes such as state income tax or your local income tax. It does not include federal income tax or gasoline tax. Interest such as mortgage interest, gifts to charity, casualty or theft losses, and unreimbursed job expenses, tax preparation fees, and miscellaneous deductions. So once you've added up your itemized deductions, if that's larger than your standard deduction, you're going to deduct the itemized deduction. If it's less than the standard deduction, you'll use the standard deduction. Okay, so whichever one's larger, you use that value. So now, for example, Diane had an AGI of $41,325, and then you're given a list of itemized deductions. She's single with one dependent, so we're going to find her taxable income. So first, we find the deduction for exemptions. She has one dependent, so her number of exemptions will be 1 plus 1 or 2. And the deduction for exemptions will be 2 times $3,650, which is $7,300. So now her standard deduction, she has a dependent and she's single, so she qualifies for head of household. So standard deduction of $8,350. So now our itemized deductions, we're going to add up the $180 for charitable contributions, $876 for state income tax, $1,752 for property tax, and $4,236 for mortgage interest, for an itemized deduction of $7,044. Now we take whichever one of those is larger. In this case, we're going to use the standard deduction. Right, so her taxable income will be the AGI of $41,325 minus the deduction for exemptions, $7,300, minus the standard deduction of $8,350 for a taxable income of $25,675.